Okay, let's be honest. The U.S. housing market has been on an absolute roller coaster. So, the big question is, what's coming next? Well, that's exactly what we're going to break down. The key forces that are really going to shape the market in 2026 and, even beyond.
You're hearing this phrase pop up everywhere, from experts, the Great Housing Reset. And look, it's more than just a catchy name. It's really the key to understanding where everything is headed. So what on earth does it actually mean?
All right, let's get right into it. Section 1. We're going to break down what this whole reset thing really is, and just as important, what it isn't.
First things first, and this is super important. This is not a crash. Let's get that out of the way. We're talking about a gradual normalization, a slow return to something that feels, well, more normal. And here's the kicker. For the first time in what feels like forever, incomes are actually projected to rise faster than home prices. I mean, that's a huge deal, right? Especially for anyone who's felt completely priced out. This is the key to slowly but surely improving affordability.
Okay, so that's the big idea. Now let's get into the nitty-gritty. Section 2 is all about the two numbers that, let's face it, everyone is obsessed with: mortgage rates and home prices.
Yeah, at the end of the day, these two numbers really do control the market. If you want to get what's going on, you have to get the dance between mortgage rates and sale prices. They're basically the engine that drives the whole machine.
And man, what a roller coaster it's been. I mean, remember those crazy pandemic lows? Down around 3%. Then, bam, inflation hit, and we shot up to a peak of 7% in 2023. After things kind of settled down in 2025, the forecast for 2026 is pretty clear: a slow, gradual easing back down.
And what's really interesting here is that basically everyone agrees. You look at the big players, Fannie Mae, the National Association of Realtors, Redfin, and yeah, their numbers are slightly different, but they're all pointing the same way: down. The consensus is we're probably going to land somewhere in the low sixes.
Okay, so rates are coming down, but what about prices? Are they going to fall? Well, not so fast. Experts aren't really predicting a price drop. Instead, what they're forecasting is a much slower, much more, sustainable level of growth. We're talking single digits here, not those insane double-digit jumps we got used to during the boom.
All right, so we've talked rates and prices, but there's another massive force at play here. It's a huge demographic shift that's really going to reshape the entire market, not just for 2026, but for the next decade.
Get ready for this number: $13.5 trillion. That's the mind-boggling value of homes currently owned by baby boomers and the generations before them. It's just a massive, massive footprint on the market.
So you gotta ask, how does all that housing wealth eventually move to the next generation? Well, this chart tells the story. You see, people tend to stay in their homes for a long, long time. But right around age 75, things change. There's this sharp drop-off as folks transition to other living arrangements or, pass away.
And this next chart, this is where it gets really interesting. This is the aha moment. As that enormous baby boomer generation starts moving into their late 70s and 80s, we are about to see a historic wave of homes hit the market. And I'm not talking about a trickle here. This is a fundamental, game-changing shift in supply, something on a scale we just haven't seen before.
And if you want to put a number on it, here it is. We're talking about somewhere between 13 and 14.6 million homes becoming available over the next decade. Think about that. That is a huge injection of inventory that's going to completely change the supply and demand equation for years and years.
Okay, so that's the big picture, the macro view. But what does all this actually mean for you? Let's break it down, whether you're thinking about buying or thinking about selling.
So 2026 is really shaping up to be a rebalancing act. If you're a buyer, things are looking up. Lower rates, more houses to choose from. That means more options and, frankly, more power to negotiate. Now, if you're a seller, it's a different story. The boom years are over. You're going to have to price your home competitively. You might even need to offer concessions, like something called a rate buydown. That's basically where you, the seller, pay a little bit up front to lower the buyer's mortgage rate for the first couple of years. It's a really smart tool in this kind of market.
And look, this isn't just some far-off prediction. This soft reset is already happening right now in certain markets. For a perfect example, let's zoom in on Sacramento, California.
So this is what that rebalance market actually looks like in the data. Check it out. Median sale prices, pretty much flat, maybe down a tiny bit. But look at the inventory. It's up a whopping 46% compared to last year.
And, as you'd expect, homes are sitting on the market a little bit longer. This right here is that normalization we've been talking about, playing out in real time. And this chart, oh man, this donut chart tells the whole story. By the end of 2025 in Sacramento, almost half, 46% of homes sold for less than the list price. Only about a third sold for more. I mean, what a massive change from the crazy bidding wars we all remember. It's the clearest sign you can get that the power is shifting from sellers back to buyers.
All right, for our last section, let's pull the camera back out for a nationwide view. Because we all know the #1 rule of real estate, right? It's all local. So while the national trend is this normalization, you're still going to have some spots that are heating up and others that are cooling down.
So where are the hotspots? The National Association of Realtors put together this list of their top 10 places to watch for 2026, and they're all looking for a very specific recipe for success. You've got strong job growth, home prices that are still relatively affordable, and a lot of people moving in. Basically, these are cities where the fundamentals just look incredibly solid.
But, of course, on the flip side, some areas are facing some pretty serious headwinds. Analysts are keeping a close eye on places like coastal Florida and parts of Texas. Why? Well, you've got rising insurance costs and, unfortunately, the increasing threat of natural disasters, which could definitely put a damper on their local housing markets.
So let's tie this all together. The big picture for 2026 is all about one word: rebalancing. It's driven by three huge forces: mortgage rates coming back down to earth, price growth that's slow and steady, and that historic wave of new inventory that's about to hit the market.
And that really leaves us with the $1,000,000, or maybe $1,000,000,000 question for the next decade. We are on the cusp of a massive, historic handoff of housing from one generation to the next. So is it going to be a smooth transition that finally gives us the housing supply we so desperately need? Or could it trigger a market earthquake, creating a whole new set of problems we haven't even thought of yet? I guess we'll have to wait and see.